S&P 500 as we get ready to trade December week 3. This kind of goes over a note that I posted to both my Twitter accounts so you get a little visual reference here to what was said in that note. Okay, we're starting off by looking at the intraday chart. Friday was a pretty interesting day. We're kind of all over the map. We came out of the gate with a big strong gap up open on a after the CPI data came out. Pre-market, it was a little hotter than expected, but lower than last month's. So we tried to put lipstick on that pig and say that that was the top for inflation and we're ready to go now. But the market finally realized that was bullshit and we just rolled over and we began to sell off. And before you knew it, we were looking below the open and dipping our toe into the gap, trying to bounce back up again, but failed and eventually just broke down below the open, and you can see we pretty much doubled down the range on the day. So if you just waited for that open and we have a clean break, you made a pretty good amount of money if you were in some puts down to here. We dipped down to 46.70, taking a look below last week's high, week one's high, and that was enough to get the buyers to come in, and we had a pretty nice bounce here. But we kind of fizzled around trying to stick the landing inside the initial balance range. And then went after the weekly all-time closing high, which the weekly all-time closing high at the time. Looked above this and failed to hold. Came back down, but we held the open, kept the daily candle green, and that was enough to bring in the buyers once again. And we took off on this kind of breathtaking rally in the final hour Friday, which took us up over the weekly all-time closing high, over the all-time closing high, to finish at a brand new all-time closing high and weekly all-time closing high on Friday, 47.12.02. And this was also a close above the monthly all-time high settlement that we made from monthly OPEX in November. And here we are headed into December OPEX. So if we can hold some support around 47.10 to 47.12 as we start the week, December week 3, that bodes well for us having a new monthly all-time high settlement this month as well, and that should give us some bullish fuel to continue the end of the year rally and performance chasing expedition that we get to watch each year. Not every year. There was the year that Trump shut the government down and we did not have a holiday rally that year. Remember that one? That was fun, wasn't it? That was like 2018, 2019, whatever. Anyway, let's take a look at the bull and bear forks on our simplified daily chart. All it's going to take is a move above 47.29 come Monday, and the bar gets lower as the week goes on to bust out of this bear fork. And once we do that, we're headed towards the top of the bull fork. The top of the bull fork starts at 48.33 and works its way kind of towards 48.50 by the end of the week, the high 48.40s. If we hit our heads on this ceiling and fall back, maybe we're going to kind of be stuck in a range waiting on the Fed. But if we do bust out over, if you see a 47.30 print come Monday, that means we are holding outside of that bull fork. We're working our way up for about another 100 points before we exhaust ourselves. If we come out of the gate weak instead on Monday and find resistance overhead at that 47.10 to 47.12, then this was kind of just a head fake thing. This is going to look like an overbought situation. Sellers are going to be looking at this impending bullish cross of the 10 and the 20-day simple moving averages, treat it as an overbought event and try to attack it by going after it, breaking down below the 2 moving averages and closing below them. And if that happens, we've gone over this many times, when you lose that 20-day simple moving average during the course of a rally, it never ends well. Once you lose that, you usually fall down quite a lot further. And I think that if it goes this way instead early in the week, this market wants to pull us all the way back to the 50-day, maybe even all the way back to the 100-day again, and back test our December low. And maybe they want to do that before the Fed comes out. Or maybe we'll sit in a range and we'll wind up making this sell-off happen on Wednesday after the Fed comes out, and then find our buy point and our turnaround point down here. And it's going to be an even more breathtaking rally at the end of the year to get up outside of this bear fork and towards the top of the bull fork, because then this thing's going to be rising towards 4,900 as we head into the end of the year. Okay, so a lot of things to chew on there, I know. Let's just take a look at the roadmap, which gives us a little more close-up view of what to look for. We want to come out of the gate strong and hold open over this. We have a new ES contract now with the March symbol, which has a nice big spread with it. So if we're going to use that contract and go after the Thanksgiving high that was made when we weren't trading here in the U.S., but futures were, we made it to ES 47.17. Now that we have another 9 to 10 point spread again with that brand new contract, it's going to take us all the way up to about 26 to 27, 47, 26 to 27 on the S&P, and that gets us very close to that top of that bear fork. We need over 47.29 on Monday to get over that thing. So that's how that scenario sets up. But if we come in with resistance overhead around 47.10 to 47.12, then we look to Friday's low. If Friday's low doesn't hold, maybe we fill this gap to Thursday's close, look below it, and hold open at the 20-day. As long as we hold open the 20-day, that is a buy the dip moment. But if we break down below the 20-day, you want to be short or step aside and just wait for this flush to play out and look to buy a dip all the way down here, maybe closer to the 100-day. Okay, hope that all makes sense. Hope this video helped you out. If you would like to read my note, go right ahead. It's posted to both my Twitter accounts. Have a great rest of your weekend. As always, good luck and good trading.